Every month, I pick my top 5 stocks to invest in if I was starting a new portfolio today for members of my community, Stock Investing Mentor. And on September 2nd, live, I'm going to be revealing my number 1 pick for September. In this video, I'm going to give you my number 5 pick absolutely free. You'll get the full breakdown, the moat, the valuation, all of it. But before I earn the right to tell you what to buy, I owe you proof that my picks are actually worth listening to. So let me show you something that I've never quite laid out this plainly before. Because anyone can claim that they pick good stocks, but I'm going to show you with the links to the actual videos where I called these live in the show notes below. Now, quick ground rule. I'm a long-term investor, so judging a stock pick after a few months is less meaningful to me. 3 years is the minimum honest window. Now, I started doing these quarterly, giving my top 5 stocks in the summer of 2023, which means that only a couple have made it a full 3 years. So what I'm going to do is give you the first 3 that I did. Some of them are not quite 3 years, but these are the lists exactly as I called them. First, on July 29th, 2023, I picked 5 stocks. Now, the market returned 66% since then, but these 5 stocks have averaged 137%. Now, I'm going to show you all of them right here. Mercado Libre plus 59. Pubmatic down 16. It's important that I say this plainly. A track record that doesn't have a few reds like this is probably a lie. But you can see that a couple of the stocks, Axon and CrowdStrike, did the heavy lifting to make this a market-smashing portfolio of just 5 stocks from back then. Let's go to the second one, October 1st, 2023. My 5 averaged 141%. Again, the original video is linked below, called in real time. You can see that while all 5 of these stocks did have positive returns, 2 of them actually didn't beat the market, but 3 of them did, some by a wide margin. And the third one that I'm going to call out from December 2nd, 2023, my most humbling one, Mercado Libre, Airbnb, Atlassian, Amazon, Axon. I had a thing for A's apparently. This batch averaged 56% against the market's 66%. So this one roughly matched the market, didn't quite beat it. But two of them are actually down. This is what happens when you pick stocks, and I think it's important to be completely transparent. As you can see, the heavy lifting in this one was done by Axon. And you'll notice that a few names in this showed up more than once. Axon, CrowdStrike, Mercado Libre. That's not me padding the list. That is conviction. When I find a truly great company, I don't abandon it after 1 quarter. I keep buying it as long as I think that the valuation makes sense. Concentration in your best ideas, that's not a bug. It's the whole point. So here's the bottom line across all 3 years. The S&P 500 has averaged across those 3 dates 71% return. My picks have averaged 111%. That's 40 percentage points of outperformance over just less than 3 years, with every single call on video and time-stamped. So that's the track record. Now, let me show you September's number 5 stock. And that stock is Duolingo. And then I know some of you saw me put Duolingo in the wild cards category of what will happen in the SaaSpocalypse. Something like the too hard to call pile. Well, the important thing to note here is I think that there is some momentum that the company has just started showing, and I believe that the potential returns are asymmetric. That doesn't mean that I'm going to run out and make this a huge 10% position, but it means that a small allocation, which is what my portfolio has, does make sense, and I'll show you what to pay attention for. So let's run through Duolingo using Stock Simplifier. By the way, if you'd like to try Stock Simplifier for free, you can simply click on the link that's underneath those videos that I just talked about. Now, a lot of people think that Duolingo is an app that you either use for free or you have to pay for a tier, and that does cover a lot of things, but it is worth noting that Duolingo is more than just languages. And if we go down to the revenue button right here, you can see, yes, subscription is 81% of revenue. It's growing fast. But they also have advertising for their free users. They have a Duolingo English test, their in-app purchases. Most of this Most of at least their users are in the United States, but it should be known that this is a hugely popular app to use outside of the United States to learn English as well. Because revenue is subscription, it is somewhat predictable. The growth is less predictable. The company might be able to raise prices, though right now that is not what they're focusing on. I would argue that this company is largely recession-proof because it's not a super expensive product, and their competitive position is dominant. However, there are rather legitimate concerns about the company being disrupted by AI. Overall, I'll give this company a 4 in terms of what I think of the business. Next, we've got to figure out what phase is the company in. Well, the company is growing its revenue fast. It does have positive operating profits. However, it's not really buying back a ton of its stock. It does not pay a dividend. So this is clearly a company that is in phase 3. Next, we go to the moat. And this is the really important part. I used to focus just on how wide a moat is, but now I focus on, is that moat widening? Now, this is Stock Simplifier's opinion, but it is worth thinking about the opinion. In the end, I have to make my own call. How hard is it to switch? Well, most of the switching costs are psychological. That doesn't mean that they're not there, but they're psychological. There are sneaky sunk costs with stopping your streak, but there is no contractual lock-in. What about scale network effects? I think that there are some network effects, but as this says, a learner in Brazil does not directly improve the experience for a learner in Japan. The data that it collects does create something of a moat, but it is not a super wide moat. What about the brand and IP? I would argue that it is a pretty strong brand. However, it's whether or not that's widening is really in question because of the fact that the company is having trouble getting some of its free user growth to be going. Is there a cost advantage? There is a little bit of a cost advantage because the company has talked about its ability to create new content using the data that it has and AI, especially open model AIs, at a much cheaper price than it used to be. And does it have any counter positioning? Something like that, like Babbel and Rosetta Stone have a built-in business of charging up front. So this freemium model is something that is more unique to Duolingo, but there are others. And again, AI coming in could disrupt this. So in my opinion, I would actually change this. I would say that the moat is thin. So I'm downgrading it by 1. I would say that its direction is growing. I wouldn't say it's a 4 where it's absolutely widening. I think we need to wait and see what happens. Now, growth potential, on the other hand, the Stock Simplifier says that there's a lot of growth potential. It could be there. The company is very clearly not focused on monetizing growth right now. They're focused on growing their users, which means a lot of free users. The free to paid conversion is amongst some of the best in its industry. They're getting more revenue per user right now. However, we know that that could reverse itself as they're focusing on growing users. If we go down and look at this, is the industry growing? Yes, absolutely. Online language learning is absolutely growing. Could new offerings drive growth? Yes. They're working on math, music, chess is a big one. And so I think that there is a lot of growth potential. I'm not going to give it a 5. I'm going to give it a 4 because of that concern, which we'll talk about in the risks section of being disrupted. Management analysis. Luis von Ahn co-founded this company. He is still at the helm. Employees love working there. They do beat expectations. However, sometimes they lower their guidance, which they explain fully, but it is worth knowing. Management is pretty shareholder friendly in terms of keeping a very clean balance sheet, and their margins are pretty good, although they probably will need to come down. Again, I would give them a 5, but this kind of decision to go away from monetizing and focus on the free users is one that shows that maybe this was a move that would have been good for them to make earlier, so I'll give them a 4. Now, when we talk about risk, this is the really important one. I'm not worried about concentration, but disruption is the big one because ChatGPT, Gemini, they can hold a conversation, explain grammar, quiz a learner. They can do all of those things. Now, it's worth knowing that Duolingo has used this technology, open model technology, to do all of that work for you, and you just pay $7 a month to get this. I think that that level of convenience, you can't sleep on that, but that disruption risk is real, and there are things that are outside of their control. Currency swings is another example of things outside their control, and also everything goes through Apple and Google, and that's important to note as well. Again, the balance sheet is in very good shape, so that's not a huge problem. I will put the risk at a 2 because I do believe that questions over the company's viability in the age of AI have yet to be answered. That doesn't mean that they're going to fail. It just means they're yet to be answered. Now, we could look at things like the PE ratio, and man, does the company ever look cheap right here at 17. We could look at things like the price to free cash flow. And again, 17 times, that looks pretty good. But I like to use a reverse discounted cash flow analysis. Now, here's what I'm going to do here, and I'm going to show you this so that you understand what's going on. I will give the company a 2.5% terminal growth rate. Usually I give 3%, but that's when the moat is a little bit wider. I think it's widening, but it's not there yet. So I'm going to give it 2.5. And I'll give it a 10% discount rate because, again, what this means is I want this to be return market matching 10% per year to find out what are the assumptions baked into this. Now, if we look at the company's free cash flow margins, we see that they have been above 30% for quite some time. Now, I'm going to assume that AI costs and maybe some more marketing that the company needs to do. I'm going to be very conservative and pull this down and say that they have a 25% free cash flow margin. So I'm being conservative about that. So what does this mean right here? Well, in order for today's stock to be market matching, they need to get that 25% free cash flow margin. They need to grow about 11% per year. But we can also say, well, how fast are they expected to grow moving forward? I mean, for that, I can just head on over here to fiscal.ai and look up what is expected. So if I type in Duolingo right here and I pull it up, then what we're going to see is if we go financials and then we pull up the company's future growth rates, what we see is over the next couple of years, the company is expected to average, you can see this right here, about, let's call it 14% growth. So if we put that in, and we can also say, well, those estimates, how accurate are they? I know that analysts actually had to revise downward a bunch because this right here is when the company announced that they were going to be focusing more on growing their user base than on monetizing that base. That's where this came down. So I'm going to keep it at just about 14%. If I say over the next 3 years, the company is expected to average about 14% revenue growth, then that means that they need to grow their revenue by about 9% per year from year 4 through 10 to justify this stock price. And I think that that's very reasonable. I think that the company can grow their revenue by about that rate if they get this right, if they do a good job of making their product excellent, expanding beyond language learning, and really get people to buy into the subscription. Again, there's a lot of work to do, but I think that there is a lot that is going in the company's favor. And for what it's worth, I've shown you the moat and I've shown you the valuation. I'll go ahead and put I think that this is an attractive valuation. We look at this and it gets a 3.4. That's not the best score ever, but I do think the risk reward is in Duolingo's favor. It is also worth pointing out that you can look at some technical analysis here, and if you do, you can see that this company has been riding its 50-day moving average up, and it's about to cross that 200-day moving average as well. But the bottom line is again, I don't necessarily think that Duolingo is a stock that I would back up the truck on, but it is good enough to be my number 5 stock for September. That's my full thesis. There's no gate. There's no email required. That's the level of work that I put behind these picks. But of course, there's 4 more, which brings us to the one you might actually really want, my number 1 stock for September, the highest conviction pick on my list if I was starting a portfolio today. So I'm going to be revealing that live on September 2nd in a free webinar. Not in a video, it's live so I can walk you through the entire series. The top link in the show notes below will let you register for that 100% free. So it's a company in a sector that a lot of people aren't sure what to think of right now. You might be surprised by what the pick is. And the only way to get the name is to be in that room. So make sure that you register for that. It's free. It's live September 2nd. Seats are limited because I'm doing this with a Q&A in a Zoom room that does have a limit. So sign up before you forget and then come back and finish the video on September 2nd. So that's it. 3 years of my receipts, outperformance by 40 points, all on video for you to see. I will see you on September 2nd when we reveal the top stock for September. Until then, Brian